So let's jump in. Um, Introducing tonight's speaker, we have Janine Rodiger from Revolution Mortgage. Pull up her information. There it is. She is the branch production manager over there, and she has a lot of experience in the lending world. So I'm going to turn it over to Janine.
Thank you, Rachel. Well, just a little bit about me. I have been in banking, let me think about this now, 33 years. So, and I've done a lot from every kind of lending to opening up branches in the retail world, to tellering, to just a little bit about everything. So as Rachel said, I do have a lot of experience. I've been in Springfield about 14 years now. So, and I work with a lot of first-time home buyers. That's the majority of my clients is first-time home buyers. So, and just so you guys know, not everybody fits into the same product. So you have to have that certain niche to make sure you know what you're talking about. So, yeah. Okay, so if you want to go to the first slide. So, you know, getting a mortgage, as it says, there are traditional 30-year mortgages. There's a million kinds of mortgages, and not everyone's going to fit into that same mortgage. So when you talk to someone, they say, I got this, doesn't mean you're going to fit into that mortgage. So we always have to find that right mortgage for you. So talking with someone is so important. Okay, next one. Are you possibly maybe actually ready to buy a house? So, you know, are you sure you want to buy a house? It is the biggest step you're ever going to make. So you really have to make sure of that. You know, are you planning on remaining in the same area for the next few years? Because, you know, it is an expense when you buy a house. You do have to put some of your own money into it. There's only maybe 1 or 2 programs out there that's 100% financing, but you still have costs associated with it. Are you ready to care for and maintain a home? You have to think about that, because when you rent a house today, you know, if something goes wrong, you call on your landlord. But if you buy a house and something goes wrong, that's your money that you have to remember that. So it's maintaining a home. They do say you got to have money in reserves or your savings account if something goes wrong. Have you created a budget so far, you know, so you know how much you can realistically afford? You know, when I bought my first house, I had a budget. I kept it on my refrigerator to know, hey, can I do this? You know, you have to know what you can afford. Have you been pre-qualified by a lender so that you know how much you can borrow based on your income and debt? The first thing I ask my borrowers when they come in, or when they come in, they ask me, what can I afford? It doesn't matter what you can afford. What do you want to pay? That's your biggest thing, because what you can afford and what you want to pay are 2 different numbers. And you've got to be comfortable with that, because you don't want to be house poor. Have you looked into benefits of numerous financing programs? There are a lot out there, and we got to find you the one that's going to work for you. So as like Rachel has, I know you guys have some, there's other ones out there. So we got to find one that fits you guys, because there are different ones and not everyone fits into that benefit of the financing programs. Okay. And guys, please stop me if you have questions. I don't ever mind. Everyone has questions, so don't ever hesitate to stop me. Considering the benefit of a home ownership, you know, tax benefits as a loan officer, I cannot tell you anything about tax benefits. We always tell you to talk to your accountant because I am not an accountant. I can't give you that. Equity, yes. When you buy a house, you have instant equity? Absolutely not, unless you're putting a down payment down. That's going to build over time. Yeah, you can control over your decisions related to your living environment. You don't have someone telling you what you can do. You do in some way, because you do have a mortgage. So there are little things, but nothing major. And the stability, it's your home. No one's going to tell you to get out unless you're not paying your bills. That's the whole thing. So, but it's nice to own your own home. I mean, it's yours. You can paint your walls the way you want it. I mean, you can do what you want. It's your house. It's a good feeling to have your own home. Okay, next. Consider the drawbacks of homeownership. So yeah, you know, always do your pros and cons, you know, and I tell my clients all the time, write down on a piece of paper your pros and cons, from renting to buy, you know, to buying. What are your benefits and what are your disadvantages of it? You know, renting, it is easy because you don't have to worry about, you know, if something goes wrong, you know, but here's the thing, the disadvantages of it, you're paying someone else's bills. I mean, you're paying someone else's mortgage, and you're paying it off for them, and it's not yours. So you have to know, is it the right time for you to buy a house? You have to feel comfortable in that, and know that it's yours. Are rates low? Absolutely. Or are they high? Right now, it's a perfect time. But there's pros and cons. It's hard to find a house right now. So you got to be patient with that. So you have to weigh those out, on that side of it. I'm reading your things here. No guarantee that the property value will increase. No, there's never a guarantee. And when they do increase, do they sometimes decrease? Absolutely, with the market. So it's always, there's ups and downs with everything that you do, especially with a house. Maintenance and repairs, you're always going to have that. It's just taking care of it. Just like with a car, you're going to have maintenance. It's just a little bit more expensive with a house than it is with a car. So, and then limited flexibility for relocation. Yeah, you're going to have that also. So again, you have to know, are you going to stay there? And no one can predict your future, but you just have to have an idea of what you're going to do. So, okay. Understanding steps in the home buying process. Preparing for home ownership, create a budget, review your credit, take a home buyer counseling class, what you guys are doing right now. Pre-qualify yourself, determining how much you can afford to spend. When I have clients come in and they say what they want to get pre-qualified, do they do their application? Absolutely. I ask them if they want to come into the office. To me, it is so important to sit down with a buyer, especially a first-time home buyer, so they understand what they're doing. There's so many numbers we throw at you that literally their heads spin because they don't understand it. And to me, I use legal papers and I have a ton of them, but we put everything down on a piece of paper and I show them all their numbers so they understand it, because there is a lot of numbers and you got to know where these numbers come from. So understanding where or what you can afford and what you can't afford, and knowing that maybe $100,000 house today costs you this much and your payments this much versus what it's going to be down the road because of rates and how the difference, what a rate is going to affect what a rate is going to make your payment, that difference, especially being on your credit score. Getting yourself pre-approved. No realtor today is going to talk to you unless you're pre-approved. Because again, they don't have time, because if you're not pre-approved, they don't know if you're credit worthy or not. And a seller is not going to allow you to put an offer on their house without you getting pre-approved. So it is so important that you go through these steps, but it only helps you. It makes you more credit worthy when you do get pre-approved. Decide what kind of home that you want. That's important. Where do you want to live? Do you want to be in the county? Do you want to be in the city? What do you look for in a house? That's important, just like you do with a car. I mean, you got to remember, you can't just trade this in a year or two. You're going to be there for a while. Otherwise, all that money you just spent is just wasted money. You're not going to get your money back at it. So, and then you shop for a house. You know what? You're not going to just pick a realtor. You're going to find a realtor. You're going to shop for a realtor so that you're comfortable with. You're not going to go with that first realtor. You're not going to go with that realtor that's listing that house. You have the right to choose any realtor that you want, and you want to interview the realtor to make sure that you're comfortable and that they're working for you, because they get paid on only if they sell that house to you. They're not going to get paid any other way. So don't just pick any realtor. Pick a realtor that's going to work for you, because you don't want them just to write a contract and then they don't do anything else for you. You want them to work for you. That's so important. Understanding the steps in home buying process. Again, make an offer. So again, that's where your realtor comes into play. They're going to help you make that offer. You're not going to just put any offer in. They're going to, if you're buying a house, you're putting an offer in a house that's not theirs, or even if it is there, they're going to be realistic with that offer. They're going to make sure that it's a fair offer for you, that you're not going to pay too much for something. Get a professional home inspection. That's important. You want to make sure that that house is mechanically sound, that you're not buying a house and then all of a sudden something goes wrong and it's costing you an arm and a leg in the next year or two. You don't want to go ahead and buy a house and now you're paying so much money out the door after you buy it. Apply for your mortgage. Well, if you're pre-qualified already, you know that here, I'm already qualified. My loan officer has my stuff. Now, all I have to do is get her the rest of the stuff, and then my file is going into processing. Buying insurance and getting additional inspections. So your loan officer is going to guide you through those steps of what you need to do for your insurance. They're going to guide you and say, okay, hey, here's your steps of what you need to do. Now you're on a shop for homeowners insurance. As I tell all my buyers, is that you want to get at least 2 to 3 quotes for homeowners insurance. Don't go just with your first one, because again, it varies from place to place. So you want to get the best insurance you can. Additional inspections, that's going to be your realtor to help you guide you through that. Again, we're the ones that are going to help you, and that's why you shop both for your loan officer and you shop both for your realtor. You want to be comfortable. You're not going to just pick that first person. So you want to make sure they're working for you, because again, we don't get paid unless we close a loan or they sell a house, and that's the way it works. And then your last thing is closing a loan. This should be the easiest process for you. Buying a house should be an easy process. And if it's not, then unfortunately, you didn't get the right people for you. And that's just the way it is. It should be a smooth transaction. Is there hiccups during the way sometimes? Yes, there's some unforeseen hiccups that we can't control, like if there's an appraisal issue, if there's a title work issue, but everything else should be a smooth transaction as long as everything's up front and is told up front. Am I missing anything, Rachel, so far?
No.
Okay.
Doing great. The only thing that they might have a question on, I've had questions in the past, would be the difference between the pre-qualification and the pre-approval. I know those are kind of two different things.
Well, and I'll go over that. So the pre-qualification is when you just come to me, we don't verify any documentation. There's no documentation verified. But see, what I do when a borrower comes to me is I'm going to verbally verify stuff. So I'm going to ask you, what is your hourly wage? Estimated how many hours you work in a week. I'm not going to use your overtime and or bonus, because if I don't need it to qualify you, I'm not going to use it, because there's so many different guidelines that the government says that you have to work there 2 years in order to qualify that. Your employer has to state that it's likely to continue. And if they don't state it's likely to continue when we do your verification of employment, we cannot use it. So I don't use it. So if I can get away without using your bonus and or overtime, I don't use it. If I know my buyers are self-employed, I'm getting 2 years tax returns, because again, I can't use what they tell me because that's not verified income. So that's a pre-qualification. You're just putting your information in and people are just going with that without asking information. I can't do that, because I can't go ahead and give someone a pre-qualification knowing that I didn't ask any questions, and then going out there and giving an offer letter to a realtor, and then it comes back on me, and then they can't qualify. I won't do that. That's my name out there, and that's my realtor's name, and that's my buyer's name. I can't do that. Pre-approval is when it actually is fully underwritten, which there's not a lot of programs out there anymore that do that. Now, we just started, it was called a Buyer's Ready program, which is fully underwritten by an underwriter now. So they're completely underwritten, conditions and all, where all their documents are received. But a lot of banks and or mortgage companies or brokers don't do that anymore, because it ties up underwriting, because they don't have a house. So that's the difference between your pre-qualification and your pre-approval.
Awesome. Thank you.
You're welcome. So understanding what a PITI, and PITI stands for principal, interest, taxes, and insurance. Your principal and interest is what pays back the mortgage. So what you borrow. So if you borrow $100,000, principal and interest is paying back that $100,000 to the bank or to whoever you borrow it from. Your taxes, that is your property taxes. That pays for your property, so your taxes, and that can change. That is part of your loan that will always change. So your principal and interest will never change. That's the part of your payment that never changes if you have a fixed rate. Your insurance, it talks about mortgage insurance, but it also is homeowners insurance too. So your mortgage insurance is on any loan if you don't put 20% down, except a VA loan. Veterans do not have mortgage insurance. They're the only loan out there that does not have a mortgage insurance. But any other loan, if you don't put 20% down, you have to carry mortgage insurance. Now, homeowners insurance is also on your loan, and you have to carry that. You have to carry that as long as you have a mortgage on your house. So again, out of your payment, the only part of your payment that will never ever change is your principal and interest. So when you have a fixed payment, as I tell my borrowers, is this is the part of your loan that will never ever change. If the only thing that you can control on your payment is your homeowners insurance. Your taxes you cannot control. So if you ever see your payment changes, it's because your taxes and insurance have changed. Okay. How much can you afford? Again, so this goes over what you can afford, and that's where your loan officer is going to sit down with you. So you have to figure out what you can afford, but what you want to pay. So what you can afford and what you want to pay are two different things. And that's where your loan officer is going to sit down with you. They talk about your PITI, principal, interest, taxes, and insurance, less than 28% debt to income ratio. That's your housing ratio, and 43% is your, 36% is your total ratio. 43 is for FHA. 28 is your housing ratio. 36 is your total debt to income ratio. But again, you're going to want to sit down with your loan officer because again, what you can afford and what you want to pay are two different things. Meet your team. You got your home ownership coach, which is you're going through now. You got your lender. You choose your lender. You actually, when you go to your lender, every bank does not have the same product. Some banks have different products. Some mortgage companies have different products. They don't all have the same. Some of them have different overlays. And what I mean by that, it's who we have investors, who we sell our products to. So most everybody's going to sell their products. And what I mean by that is who I sell my loan to. So you may do a loan with me, but I'm going to sell it to Penny Mac, or I'm going to sell it to AmeriHome. And they may have a little bit of different overlays. And they may say my credit score on a VA loan, I can go to 600, where you may go down the street to Park National, and they may say my VA loan 600 is my lowest credit scores. So that's where I mean by each lender may have different overlays. But you want to shop that. You want to be comfortable with who you go with, because you're going to be working with them for 30 days once you have a contract, but you're going to work with them prior. So you want to be comfortable with them and know that they're going to respond to you if you have a question, that they're going to get back to you, because this is the most important part of your life. This is the biggest purchase you're going to make. I don't care if it's $20,000 or $200,000. It's the biggest purchase you're going to make. So you want to make sure that you have someone that's always going to respond to you when you have a question within 24 hours or shorter. Your real estate agent, the same thing. You need to shop that person. You need to interview them. You need to make sure that they're going to work for you, because once you get that contract, you still have a process to go through. You still have 30 days. You have, inspections to go through. So when those inspections come back, you need to know what you got to do, because you can't go to your lender. Your lender doesn't know. Your lender is not licensed like your real estate agent, and vice versa. So when my clients come to me and ask me something about their house, I'm like, that's your real estate agent. I can't answer that question. And when they go to the real estate agent and they ask them questions, they can't answer my questions. So, you want to make sure that you really interview who you go with and feel comfortable. Just don't go with your first person. Your home inspector, your real estate agent might give you some names and numbers of some people to do your inspections for you. But I always recommend doing that home inspection, do that whole house inspection, because they're going to tell you everything that's wrong with that house. And that's where, if there is something, your agent is going to be able to go back to the listing agent and the seller and say, hey, this is what we need to get done. Your attorney or your title agent, either you or your realtor is going to pick that. As a bank or a lender, I can't tell you who to go with. And what that title company does is they're the ones who they search that property, they make sure it's clear of all liens on that property. They search that property, they go back 40 years. They also handle the transaction of the closing. So at closing, everybody will meet the title company and they handle all of that for you, and they disperse all funds. Your appraiser, you have no control in that. Neither does your real estate agent. The bank or your lender hires it. It goes through a third-party vendor. So as a lender, I wouldn't even know who it is. It goes through a third-party vendor, as we do hire them. Your surveyor, the title company hires them. Now, the title company typically requires that in order to give clear title on that. Most of the time, the bank or the mortgage company doesn't require them, but the title company does. And your insurance agent is who you choose. We cannot tell you who to go with. So that's your decision. You shop that and you feel comfortable with it. I will tell you, if you do whoever has your auto, you usually get a better discount with that, multi-discount with that. So again, some of the people you can choose. So there's a difference between a mortgage and a promissory note. So the mortgage is what is a loan that the bank will give you. So mortgage is what allows the bank to foreclose on the property should you not pay your note. So the promissory note is what allows the bank, to pay back the loan. So that's what you're telling the bank. I'm borrowing this much money and I'm paying it back to the bank. Does that make sense? Am I saying this right, Rachel? Is a document that the promissory note is what you sign, stating that you're going to pay back that debt to the bank.
That's right. Yes.
The mortgage is what secures the collateral, which is your house. That allows the bank to foreclose should you not pay back the debt.
Exactly. Yep.
Yeah. Gotcha. And in the state of Ohio, it is called a mortgage. In some other states, it's called a deed of trust. Understanding your steps involved in obtaining a loan. Again, it's researching. As I told you, you're gonna research. You're going to choose your lender, your pre-approval process, and you typically pre-approvals are good for 90 days. That's because your credit report's only good for 90 days. Your loan application, that's also your pre-approval. Your loan application is once you find a contract, that's when the clock starts ticking. After your loan application, you have your disclosures. It goes through processing, goes through underwriting. That's when your underwriting approval comes through, and then your closing. So it goes through those steps. And that's where your loan officer will walk you through every single step of your process of how that works. Understanding your 4 C's. Your 4 C's are so important because it's about credit. Your capital, that's how much money that you're going to have. Your capacity, can you really do this? Your credit history. Your credit history is so important, and people don't realize that your credit is a big driver on this. And then your collateral. And then I think the next slides will tell you a little bit more about it. So your capital is your down payment, your loan fees, your homeowner's insurance, escrows, reserves, moving, all that goes underneath that capital. So your down payment, like I said, most loans are going to require a down payment. There's one loan, which is USDA, that requires 0 down payment, but you have to be in a certain area. It also is household income driven. So it may be just you on the loan, but it's going to require all the household income to see if you qualify, because if that household makes too much money, you can't do it. There's other loans that require 3% down payment, and it's only who's on the loan, doesn't matter what the household makes, and that's conventional financing. And then there's FHA, which is 3.5%, and then there's regular, which is 5% down. You got loan fees. Well, Okay, you have your loan fees, you have your homeowner's insurance, your escrows, which are your taxes and your insurance, and your reserves. These are all setups for your closing costs. And then again, you're going to have your moving expenses, and that varies to what you choose that to be. You might have friends that'll help you, so maybe you don't have much of that, but you're always going to have moving fees. Okay. I'm not saying that word again. I can't pronounce it. You have current income. So your income is huge. We got to make sure it's the stability of that, your income history. So if you're switching from job to job to job, that's going to be an issue. If you have a gap in your employment, that's going to be an issue. What are your future earning potential? So FHA, if you've had 3 job changes, more than 3 job changes in the last 2 years, that's a problem with FHA. So they look for that stability with you. They don't want, you don't have to have a 2-year history at one job. I mean, if you've changed job in the last year, that's okay, but they don't want to see that constantly changing jobs and having 4 or 5 jobs, or, having, a 6-month gap or 2-month gap. So that stuff's important. You got to have some kind of stability. Same thing, like you can't be moving. You've got to have stability, because that tells a lot about a person. Amounts owed, your installment, your revolving accounts, monthly payments. I will tell you on your credit cards, which most people don't know, you got to have a third. When you get a credit card, if your limit is $3,000, I'm just using round numbers, or $300, don't charge more than $100 on that card. It's a third of what your limit is, and that is huge. And a lot of clients will max out that credit card right away, and there goes your credit score. It goes down because your utilization, you hurt your utilization when you do that. So you want to be, smart when you have credit cards too, and don't close them out, because that hurts your credit score. Okay. Credit history. Again, we talk about your credit history. That is so important. You make sure you pay it. A lot of people get where they'll co-sign for somebody else and someone else hosts their credit. And you know what, that sticks with you. So you have to be really important, really smart about and think about what you do with your credit. You know, you want to help somebody out, that's great, but you know what? You've got to remember that is your credit and that's going to stick with you the rest of your life. So, or next 7 or 8 years. So you got to be smart about that. Current liabilities, just, you know, think about that. Think about your debt to income. You know, you can afford it, but on paper it's different. You know, you might say, hey, I can afford this, but on paper it's going to be different. And then no credit history is worse than bad credit, because no credit history, we don't know how you pay. So you got to have some kind of credit. Okay. Collateral, is the house worth what you're paying for? And the only way we're going to know that is by an appraisal. And again, your realtor is going to help you with that. So you're not going to pay too much. Rate your finances along the 4 C's. Again, you don't know anything about the house, the collateral, until we have an appraisal or until you find it. But, you know, do you have a history of savings? And again, saving is so important. So, you know, I try to educate my borrowers on doing that. You know, if you look to buying a house in the next, you know, couple of months, start saving now. Get yourself used to that, because if you can't start doing that now, you're going to have a problem down the road. So you got to start doing that now. You know, has your income been steady? You know, think about that. You know, if you want to get yourself ready for buying a house, start doing it now. Don't wait till the last minute. You know, do you earn enough to make a new payment and still pay your monthly bills? And that's why I say, again, what you can afford and what you want to pay are different. You know, you don't want this huge expense because you still want to live your life the way you live it today. You don't want to be house poor. You know, are your monthly debt obligations low and manageable? You know, look at that, put them on paper. You know, if you don't put them on paper and you don't see them, you don't know. And you got to be, again, handle your credit responsible, you know. And if you were a lender, would you make a loan to yourself or to a person with financial habits? You have to be honest with yourself about that. You do. Qualifying ratios, and you know, we talked about that housing ratio or front end ratio is 28%, and tells you percentage of your gross monthly income that can be used. And we use your gross. And again, take out your don't use any bonus, don't use any overtime, use your base income and do that and see, are you at 28%? And then use your total, what you think you want your housing payment to be with your total minimum payment. So even if your credit card payment, say you pay 200, but your minimum is only 35, we're only going to use that 35 payments. See what your total ratio is going to be. Are you within those guidelines? And that's where you know where you're going to be. Qualifying ratios, again, that's what it's telling you there. You know, your conventional and then your government. And again, yeah, some ratios go to 50%, but you need compensating factors. You got to have a strong credit score. You got to have reserves. You just do. I mean, and they're not going to just do it for anyone. It's really hard, especially with COVID. They have put a lot of overlays. The automated underwriting system, which is Fannie Freddie guidelines, they put a lot of overlays. So it's even getting harder with a 620 credit score or 640 to do FHA. It's really hard without 5% down. So you can go, yeah, thanks. Understand a pre-qualification. Calculations using affordability ratios show. Again, how much money the lender will lend, home price you can afford. And again, your lender is going to sit down and do this with you. And this is, again, something I will do. How much down payment you're going to need. We're going to estimate what you're going to totally need for your down payment and or closing costs, with or without the seller giving you closing costs. Because in today's world, you can't guess seller's going to give you closing costs anymore. It's a seller's market, so seller's not giving much anymore. It's really hard because they're going to make you up pay for that house, and then you got to hope that house appraises for more for them to give you closing costs, and then how much your payments are going to be. The good thing is rates are still low, but you got to have a good credit score to have a good rate. So if your credit score is not there, you're going to still pay a higher rate. Understanding your pre-approval or conditional approval. And we discussed a little bit about that. Get reassurance before searching for a house. If you're just putting a pre-qualification in and you're putting your information in and a lender is not calling you back to ask you any information, then are you really going to feel reassured that you're really pre-qualified? I mean, are you going to feel confident that that's a good letter? I wouldn't. because you're just putting information and you don't know, this is not your job. So that's why you want to search and make sure you have that right lender. And again, yeah, you have to apply for it in advance, because you can pass that letter, but when you put that offer in and then you have no idea, and then that file goes to processing and underwriting, and then you're going to be on like nervous and saying, am I really going to get pre-approved because nobody asked me my questions? Have a guarantee that the lender will lend a fixed amount within a set time period. These are the questions you want to ask. What's your time frame? What is your turn time, from start to finish? I can tell you, when I get an application contract, I'm going to get your disclosures. I'm going to lock your rate, and then the next day we're going to get your disclosures out. Once you get me my documents to me within 24 hours, because I send you an email, and then you get your disclosures, and I ask you to upload them to me, and I have everything. Your file goes to my setup person. She orders your title work and orders your appraisal that same day. Your file then is pushed over my processor. Within 24 hours, it goes to underwriting. Our underwriting turn time is 24 to 48 hours, and then we have your conditional approval. So you have an answer within probably 4 to 5 days from your contract, if not sooner. And our total turn time, you can close within 30 days unless it's a delay due to the appraisal, the title work, which we can't control. So these are the things you want to ask. What's your total time frame? What's your time frame for an approval? These are all the things you want to ask your lender. Your documents needed for pre-approval. You're always going to need your 2 years W-2s from all employers. 2 years federal tax returns. Now that's depending, like we don't require tax returns unless you're self-employed or you have rental income. 30 days worth of pay stubs. So people think, okay, 30 days. Now, if you are paid bi-weekly, I need 3 pay stubs though, because only 2, even though it's less than, only 2 are only less than 30 days. So we need 3. If you're paid weekly, it's 5 pay stubs. 2 months bank stubs with all pages, even if blank. So it says not a history transaction, but you got to remember 2 months worth of bank statements. People don't give us every single page. If it says 1 of 5, you got to give us all 5 pages. So if it tells you how many pages, we want all of those, because we don't know what's on the last page. So even if it says left intentionally blank, you send us that page. Divorce decree, it's got to be the recorded divorce decree with all pages. So if it says to include the separation agreement, include the separation agreement, the child support orders, all the ones that are recorded, the underwriter is going to require that. Your bankruptcy documents, also the recorded one along with the discharge discharge papers. We need that also. Underwriting requires that because we go by the discharge date. So that's what they use. Even though it's the bankruptcy documents, they go by the discharge date for regulations. Self-employed borrowers, profit and loss, year-to-date profit and loss. So if we're in the month of August, I want from January to August on that. And it's got to be signed. Business tax returns, 2 years of that. Business bank statements, that is new. Fannie and Freddie came out with that. They want 3 months business bank statements. Who makes mortgages? Banks, savings accounts, credit unions, nonprofits, state, local agencies, USDA, sellers, and mortgage brokers. Pretty much everybody. Your loan categories. So like I said, there are a lot of loans. Not everybody fits into each product. And there are some banks that they have what's called a portfolio loan. Oh, you have them on there. Sorry, I didn't see that. But yeah, so every loan is different, and we got to put you in the right product. So don't have anyone just put you in one product because that's all they know. And some lenders will do that. And I know some lenders, because they don't know every product, they're just going to put you in one because that's all they know, and that's not the right thing to do. You got to know your products. Okay. Special loan programs. Fannie and Freddie Mac affordable lending products. That is your Home Possible and Home Ready program. Those are your 3% down for conventional financing, and that is based on your income. So those are great products, and that is only based on the person on the loan, not a household product. And they are great programs. You got to take a first-time home buyer class, but that is not a big deal. It's easy, but those are great programs to do. The rates are better because they have limited rate adjustments, and so as the mortgage insurance is better because they have that limited The mortgage insurance has a different code on it too, so that mortgage insurance is lowered also. Local break programs. I don't think we do either one of those. I have to find out if we have Welcome Home or First Front Door. I have to find out, but we do with you guys. So we work with OFA, and I work with Neighborhood Housing. So yeah, we also have Community First. Have you heard of them, Community First? I'm not a big fan of them.
No, I've not heard of them. I'd love some information on it.
Yep, I'll send you that. I have some on that. Yep. Down payment assistance, special savings account loan or grant programs paid toward borrowers towards purchasing a home. Eligibility varies. Down payment, assess down payment stuff. So yeah, so there's down payment assistance programs. We're always going to let you know what there are. If my borrower needs it, I'm always going to find out if there's down payment assistance programs. So I have borrowers that are in Dayton, and then sometimes there's some down in Dayton that has down payment assistance program. So I'm always going to find something if they need it. Always factor because I'm make sure my borrower has something. Predatory lending. That was out there. That is a huge thing. Don't ever feel pressured into buying or getting a mortgage from a lender. High interest rates, that's why you shop it. There should not be balloon payments or negative AMs anymore. Those were really bad back before 2008. We had a lot of those. There should not be any prepayment penalties anymore or any of that stuff anymore. That should all go by the wayside. So yeah. We learn about that stuff. Those were terrible. Understanding types of loans. So you got most of the time you're going to see fixed rate mortgages. Your adjustable rates, you're going to see those on home equities. Your portfolio loan. So you'll see some of that on a portfolio loan. So a portfolio loan is one that a bank will have. You'll see those on construction loans. Or like a bank might have it because maybe you could qualify for something, so they're helping you out. Or because I know at West Banco we did that. Well, they didn't fit into a Fannie Freddie product because something happened. So, and they were good clients. We put them in in-house products. So, just for the time being. Balloon payments. I have not done a balloon payment. I don't even know they exist anymore. Have you seen them?
I have not seen any recently. I know some clients that have started their mortgage years ago. Yeah. Mm-hmm.
Interest only, you're going to see those in home equities. So a home equity line of credit, second mortgage, you have interest only payments. Bi-weekly mortgages, I don't see those anymore either. Now there's companies out there that will say, hey, for your mortgage, you can pay us and we'll pay your payment. You pay them a fee. I said, I think that's stupid. Pay it yourself, pay your mortgage yourself, just make an extra payment or extra principal reduction, and you're going to get to the same spot. Why would you pay a fee to somebody to make a payment? I don't think so. A graduated mortgage payment, I've not seen any of that. Instead of rate reduction mortgages, I don't even know any of these shared equity mortgages. I don't know any of these.
Yeah, typically what we're seeing mostly are the fixed rate mortgages where the rate's always the same, or sometimes an adjustable rate where it starts out low and then it can be higher later. Yeah,
you're going to have your 5-1, 3-1, 7-1, 10-1 ARM. And again, like those are more your portfolio. Like, so a bank may have that because something, like we've done those at West Banco. And so we have special programs we've done those with, but yeah, I don't really see the other ones. I've never heard of a graduated payment mortgage or an incentive rate reduction mortgage or a shared equity mortgage. Never heard of it. Okay, so I learned something new. So your loan cost comparison, $100,000 purchase price shows you the difference between a 5% rate and a 3% rate. So that's why, again, your credit score makes a huge difference. And that shows your difference in what you're going to pay in interest. That's a big difference with your interest rate. Compare loans and programs. Always compare them. So what I will do, I'll sit down with a customer and I'll show them the difference between a conventional loan and an FHA loan, because some people, when they buy their first house, they're not going to stay there forever. So some people are payment conscious, and some people, when maybe their debt to income ratio is a little bit high. So I got to show them the difference between the two, or whatever it may be. So I'm always going to show them the difference between a couple products. Here's your 3 options that we have, or here's your 2 options that we have, so they can see the difference in the interest rate, the APR, the term, the down payment, and their closing costs and fees. And again, there's no prepayment penalty. So you want to make sure you see differences between the 2 or 3. Make your decision. Again, can you repay the loan? It's your monthly payment. You don't want to fall behind. Again, this is your credit and it's going to stick with you. And the worst thing you ever want to do is have a late payment on a mortgage. That is the worst thing you want. Are you comfortable with the payment? Again, you want to be able to live the lifestyle you're living today. And again, you're going to have those costs. You can't call a landlord anymore, and you can't call your mortgage company and say, hey, something went wrong. Can you fix it? This is your responsibility. So this is your house. You got to fix the expenses. Have you shopped around? And you got to remember, rates are going to change until you have a contract. And that's one other thing you want to do when you're shopping around. You want to ask them, when do they lock in your rate? When you get a contract, when the appraisal comes back, because that's going to make a difference too. Some lenders will not lock in your rate until after the appraisal's back or until after you have an underwriting decision. Some lock it in right then and there. You have to decide when you're going to be comfortable with that rate locking in, because once the rate's locked in, it will not change. So you have to decide how you're comfortable with that. Does the loan not have risky features? You don't want any risky features. You want it to be a fixed rate because you're comfortable with that. And do you understand all loan terms? And if you don't, do not be afraid to ask those questions. I mean, this is your loan. Again, this is 30 years that you're signing this for, so you have to be comfortable and know what you're doing. Okay. Applying for the loan. Again, gather all your stuff. And you know what? If you know you're going to be buying in the next few months, start making sure you know where all your stuff is. Know what your W-2s are. You know what? Your pay stubs. If you don't know how to get them, because some clients don't get pay stubs anymore, start asking your HR department or get signed up for ADP or wherever they're at, because I have clients all the time say, well, I don't get pay stubs. Well, they don't give them to me. I said, well, they have to. Well, no, they don't. Yes, they do. So ask your HR department, get set up for that. You know, make sure you know where your documents are so you have that when you're ready to go. Discuss the details of your loan terms. You know, make sure you understand all that. Complete and sign written application form. Today's world, there's no more written applications. It's all online. So, you know, we do everything electronically now. Provide copies of required documents. You can, well, I have my clients do whatever easier. With our new, we're very techy. So our app that we have, you can scan, we have a scanner on our app. So you can scan everything to us, goes right to your loan file, or I tell my customers they can come in and drop it off to me, whatever's easier. We give you the documentation to sign for verification and then signed authorization for credit report. We can't charge a fee to collect your credit report. You can't pay a fee. We can't collect that fee. The only fee you pay is when the appraisal is ordered. You pay them directly to pay for that appraisal. Understanding the approval process. Again, processing. So once you get your contract and you sign your disclosures, your file's going over to my setup person. Monica's ordering your title work. She's ordering your appraisal. She's ordering your verification of employment. And that is important. Now, sometimes your employer will not give us a verification of employment. They'll make you order it, or they're going to make you pay for it. And we don't have control over that. So we do let you know that in calculating your housing ratio. So they do all that. Your file then goes over to my processor. She actually calculates your housing ratio once we get your verification of employment back. And we match it up based on your pay stubs. Because again, not that you're making those up, we have to verify everything. Everything has to be a paper trail. She gets your file ready and sends it over to underwriting. And usually our underwriting process is 24 hours right now, sometimes 24 to 48 hours. And your conditions, we're going to have a ton of conditions and you're going to have a few conditions. And that's usually how it is. And if you send in a clean file, guess what? Your file is coming out clean with hardly no conditions. And that's how we try to do it. So if you can give us everything we ask for up front, it's less that you're going to have when it comes out of underwriting. Legal reasons for denial. Again, if your debt to income ratio is high, we're going to tell you up front, and we should. And if you have a loan officer that knows what they're doing, they're going to tell you up front prior that your debt to income's out. So we know that. Insufficient funds. We're going to let you know, okay, here's what you need. Can you get a gift? Can you get this? Can we get you a grant? But these are reasons for denial. Low appraisal. If that appraisal comes in low and the seller won't renegotiate the contract, yeah, I mean, you either have to come up with that difference or they can't do the loan, because it's the appraisal or the purchase price, whichever's lower, or your credit. If your credit is lower than what they're going to loan on, then yes, unfortunately we can't do anything. We're stuck. Our hands are tied. Okay. And standard loan conditions. Mortgage insurance is standard insurance, homeowners insurance, flood insurance if you're in a flood zone, clear title, lender's title insurance, termite inspection and certification, always on an FHA, most of the time on an FHA. Only other time is if the appraiser calls it out and says, hey, you know, we need a termite inspection. Survey, that's the title company, if they require it, we don't require it. Other inspections, only if the appraiser calls something out on the appraisal and says there's an issue, then the underwriter can request one. Property value and condition contingencies, document contingencies, and then other requirements. Again, if you're selling another property and it's contingent on the sale of that house, and you need those proceeds, stuff like that. Those are all standard conditions. Loan fees, there's no loan application fee. We have an underwriting and processing fee. You got your credit report, which is standard, your appraisal fee. I said your loan origination fee and processing. We don't have a doc prep fee, and there's no broker fee, but some other lenders may. So I don't know about them. Closing fees, again, you got your loan fees, your interim fee, your interim interest. That's your interest, prepaid interest. You have your insurance premium and your escrow. So your insurance premium is your first year insurance. So that has to be paid at closing. So say you close in February, we're collecting interest for the whole year. And then as you make your monthly payments, it sets up your escrow for when your insurance is due for the following year. And then you have your escrow account deposit, which sets your escrow for your taxes and insurance based on the month that you close. So we have enough for when your taxes and insurance are due, we have enough in there to pay it when it's due. Your interim interest is what's called prepaid interest. So say you close on February, I don't know, 19th, and there's 29 days in the month. I don't know how many days it is this month. So we're going to collect interest for 11 days to bring your loan current to March 1st. As you make April's payment, you're collecting interest for March.
Right.
That makes sense?
And just a quick note, that closing disclosure document that you see there, that will be given to you before you go to the closing.
Mm-hmm.
And it'll have the breakdown of everything that you're paying and everything that the seller's going to be paying as well.
Mm-hmm. You have to sign that 3 business days prior to closing, or you cannot close. That's part of regulation. Yep. As a loan officer, so we as a bank or mortgage company, we have to file regulations, and if not, we can get fined. So we are really heavily into these regulations. So your Equal Credit Opportunity Act forbids us for discrimination against bias of race, color, religion, origin, sex, marital, sexual age, whether you receive income from public assistance programs or not. So our Fair Housing Act, discriminations in all aspects of residential real estate related transactions. So again, in enforcement agencies, you have the right to file a complaint if you feel like you've been discriminated. And you will see, like, we have disclosures, we have them at application and we have them at the end of application also. So we're based on our disclosures. And then your do's and don'ts. You know, and again, and then I know we went over a lot of all of these already. What I'll tell you and what you can take from this is when you're ready, shop your lenders, shop your realtors. You know, don't go with the first one. And someone might say, hey, I went with this one and I loved them, but you have to love them too. You got to be comfortable with that person. You know, even if, and you may, but just shop them, because again, it's going to be your process and you got to be comfortable with them. You can't just go with the first person. And you know what? Hey, you may go with them and it's okay. And if you get pre-qualified, guess what? You can get pre-qualified with someone else too. Because if you go within a two-week period, it doesn't hurt your credit score with mortgages. Did you know that, Rachel?
I was told it was 30 days for mortgages and 2 weeks for car loans.
It's 2 weeks with 2 or 3 weeks with mortgages. Okay. If as long as, but I don't have them. Like when a clients come to me, I ask them what their credit score is first, and I can at least tell them what rates are. Because usually I'll tell my borrowers what their credit score is, then what credit score is, because I know they're going to shop, and it's the fair thing to do. Mm-hmm. But be comfortable with who you go with. Don't just go with anybody. Again, it's the biggest purchase you're ever going to make. and you're probably gonna buy another one. But again, they're still the biggest purchases you're gonna make. And you know what? It's not for a week or 2 weeks. It's not for a year. You're gonna have it for a while. So you got to make sure you're doing the right thing, and you got to be comfortable with it. Questions? You want me to recap this?
That's okay. I think we're pretty good there. And they're going to get copies of all these slides.
Okay.
So we'll be sending those out tomorrow.
And you have my number there too, right, Rachel, for them if they have questions?
Yeah.
I mean, again, I don't ever have, if anyone ever has questions, they can always call me or email me. Don't ever mind.
Awesome. And we will make sure you get those with the slides.
Yeah.
Wonderful. Okay.
I know I talk a little fast, but that's my New York accent. So.
It was great. Very, very helpful. Thank you, Janine. We appreciate it.
You're welcome. Well, thank you.
Yeah.
I appreciate it. I won't keep you guys. I know you have the rest of your night to finish up.
No worries. Well, you have a great night.
Okay, thank you. You too.
Okay.
Bye.
All right. So Pepper, I saw that you joined us. I'm glad to see you out there. And so anybody, absolutely no questions tonight so far? All right. Well, we are going to forge ahead. We have James Clay, that's my coworker. He's awesome. He has a ton of information about home inspections, and he's going to cover that section here for the next hour. We can't hear you, James. Can you unmute?
Yeah, that would help. Is that
There we
better?
go. That's much better. Thank you.
It's always those small things. And you can see my screen all right?
Yes, I can. Mhm.
Okay, good. All right. So we are going to get started. And I always like to jump in about 15 minutes early because I like to hear the presentation from the person in front of me. And Janine was talking, I believe that's her name, right? Rachel, Janine?
Yes, Janine Rodiger.
Yeah. So she was saying about, you've got to be able to feel good about your realtor and mortgage lender. And it's really boils down to one word, and that's trust. You just have to trust who you're, working with. And the reason why I say that is you need to also trust in a home inspector. So if I was to, let's see where I was going to go to my participants. Okay, so if I was to ask Jamie Harris, is it really important to have a home inspection? You can unmute and answer if you would.
Yes, I need it. Absolutely, I do agree. You should have a inspection for a lot of different reasons.
And can you elaborate a little more on what your reasoning is of why it's so important?
Yeah, for sure. Let me go to the other room so I can hear. I'm on my other homework. Yeah, absolutely. I mean, obviously, when you go to a house, at least for me, and for other people, you look at it and kind of like it's nice on the surface. But for instance, if you see a water heater or other things, to me personally, I wouldn't know if it's in working order, if this will be covered. You just don't know those things. Unless, again, the house on the surface can look good, but the other details as far as electrical, plumbing, that's just something I would not know, and you would need help, on that type of stuff.
Correct. So Jamie, while you're on here, what do you think the average cost of a home inspection is? Any ideas?
I want to say I checked it actually a few years ago because I was looking at a house in Dayton, well, my grandmother's house, and I believe my aunt said when they did it, it was $356, but that was a few years ago, for an average.
Yeah. So typically, I was doing home inspections for almost 9 years. And really the only reason I stopped was I started working full-time at NHP. I was doing home inspections even while I was part-time at NHP. And my average cost was like $365 for about a 12 to 1,500 square foot house. Then I would do a termite inspection for another 40. So, you know, probably 75% of my inspections were right at $400. That included a whole house inspection and a termite. So you're looking at, at a kind of like a $400 insurance policy on an inspector coming into your home and telling you that everything is okay, or you're possibly going to have a $15,000 to $20,000 repair on your foundation if you pursue buying this house. So when I went and asked Jamie, is it worth having an inspection? It most certainly is. There may be a time to where you buy, I don't want to say the perfect house, because there's no such thing as a perfect house. Knowing that from experience, I've built 2 houses, you know, one when I was on my own for myself, and then one when I was working for a company. I mean, I've built helped build several houses, probably, I don't know, several hundred, you know, working for a company through the years. But there's never the perfect house. There's you know, I could build a brand new house and go back and say, boy, I wish I would have done this, or wish I would have done that. There's no such thing as the perfect house. You are looking for your dream home, and you know, hopefully you can come close to that when you're purchasing. But that inspector is going to most certainly find a few handful of things that could be potential issues, like Jamie said, a bad water heater, perhaps a bad roof. Well, a roof right off the bat could cost you anywhere from $12,000 to $20,000, depending on how big the house is. That is not uncommon at all with the cost of materials, whether it be, you know, structure or just the shingles themselves. Labor has gone up. So, you know, like I say, $12,000 to $15,000 is very common for a roof nowadays, unless you end up doing it yourself, of course. But not many people can really do that. So the importance of home inspection is, I'm just trying to get rid of this, is very real. So I don't want you to think that, oh, that's just going to be a waste of money. You know, and another thing that I believe it was Jamie that mentioned was she's not trained to see the things that a home inspector is trained to see. We're going to talk about that in the next slide or two. We're going to talk about your 5 senses also. But, you know, home inspectors are trained and trained yearly. And now the state of Ohio has passed a law to where home inspectors do have to be licensed. It was just up until last April, I believe it was, I lose track of time, that home inspectors did have to become licensed. I took my national exam. I passed the first time, but I never got licensed. The state was still in limbo as far as how they were doing it. And then, like I said, I became full-time employee on an NHP, so I never got my license, although I could have if I would have, you know, gone through with it. But there was no need because I wasn't doing the inspections. So anyway, but on our next slide, for your protection, it is very important to get a home inspection. You, and I highlight you, must make a choice on getting the home inspection. It's not done automatically. Your lender is not going to tell you to get a home inspection. Your realtor hopefully would advise you to get a home inspection, but there are realtors out there now that will tell you that, hey, the way the market is going now, it is such a hot market. that houses, you know, you've heard the term, well, why don't you go home and sleep on it or go home and think about it? You don't have time to do that anymore if you really want that particular house, because the market is just so wild and crazy right now, and the prices are unreal. It is definitely a seller's market, meaning that if I was selling a house, I could probably get 30 to maybe even $40,000 more than what it's worth. Now, as far as the buyer goes, it's not a buyer's market, it's a seller's market. Then the buyer is the one that ends up having to fork out the extra money. So let's say that the house that you're buying, just for numbers sake, the owner is asking $100,000, and the appraiser comes back at $90,000. Well, somewhere along the line, somebody's got to give or take that $10,000 difference, because you know, the appraiser is saying that it's only worth 90, but the seller's asking 100. If you really want that house, then you need to come up with an extra 10, or maybe you can meet them halfway and they come down to 95, and then you only bump it up. You add that 5,000 out of your own pocket to make that transaction work. But I mean, I have a family member who's in the process of closing. They haven't closed yet, and he got a tremendous amount more. He even got more than what he was asking. Somebody just drove up, saw the house was for sale, and say, "Hey, will you take X amount of dollars?" And he said, "Sure." You know, that was about, I believe it was like $10,000 more than what he was asking. Just crazy, crazy, crazy. So the choice is yours. Just remember that. And don't feel pressured into getting it, but just think of it like an insurance policy that, hey, you know, I really don't know what I'm looking for. I really should spend this $400 and get it. And that way you can sleep at night and not worry about the roof over your head not being, you know, a good roof and need a repair in a matter of months. The appraisal is not a home inspection. It's totally two different things. The appraisal is basically just telling you how much the house is worth. A home inspection is really getting down to the nitty gritty and telling you more about the bones of the house, as a lot of people would like to call it. The mechanicals, the electric, the water heater, the furnace, the air conditioner, the chimney, if there is one, all those things are part of the home inspection, but not part of the appraisal. FHA and lenders may not guarantee the condition of your potential new home. Now, FHA does have their own inspection. Sometimes they're kind of, I don't know if fluid is the right word that I want. It's kind of flippity. You know, they just kind of go in and, you know, look at this, look at that, and they call it an inspection. It's not a true whole house licensed inspector type inspection. So be careful with those. And your home inspector may test for radon, health and safety, and energy efficiency. Now, I mentioned that I did the whole house, excuse me, the whole house inspection, and termite. I did not do radon. I did not do energy efficient, which can be like a blower door test and things like that. So mine was strictly just a home inspection and termite. And then select a trained professional home inspector. Some people, you know, they might have been working at, let's say Home Depot, and they think they know everything about a house just because they worked at Home Depot. Well, Home Depot maybe laid them off, or they wasn't making enough money. Hey, I think I'll go into being a home inspector. I worked at Home Depot. Surely I know what a home inspector does. Well, not necessarily. You do have to be trained. There are EDUs, I think that's what they call it, educational credit units. So that's ongoing education. So I believe it's either 14 or 40. I forget which it is. Currently, you have to have that many credit hours towards your education on a yearly basis to maintain your license as a home inspector. So it's very rigorous. There are some great uh, like companies or groups like Internachi is a great home inspection group. NAHI is one. ASHI is one, and they're just acronyms for like American Home Inspection Inspectors. Internachi is just more across the country. You have different chapters, which Ohio has its own chapter, and so forth and so on. And it's just a group of guys and ladies who just, you know, get on Facebook. They have the Facebook pages, and they just go over different scenarios and kind of educate, you know, each person with something that they came across. You see something different every house that you go into as a home inspector. There's just so much crazy stuff. This slide here, this is probably where we're going to spend the most of our time tonight. And don't worry, you know, this is a 66 slide presentation. And like Rachel said about the slide presentation prior to this with the mortgage lending, you're going to get this PowerPoint also. So you'll be able to look at all 66 of them. And there again, I'll tell you this at the end, I'll tell you now, if you ever have any questions about anything that was on any of these slides that we possibly did not cover, feel free to call me at NHP and say, hey, your PowerPoint presentation on slide 57 mentioned about so-and-so. I'm not quite sure what you're talking about there. Can I ask you a question? Sure, no, not a problem. You know, that's what we're there for. This is about home buyer education. So we're not here to embarrass anybody or, you know, look down on anybody because you don't know what you're talking about, or, you know, you don't have the experience. That's not what this is about. This is strictly to give you a tool to use when you do go to purchase your house. You'll kind of have questions for the inspector. You'll have a little bit of a background on what to look for, you know, as you walk through that house for the very first time, and you know, just some thoughts on that. So 10 important questions to ask your home inspector before you even hire them. Question number one would be, what does your home inspection cover? I was asked this question quite a bit, such as, so when you get there, what is your typical routine? Do you cover chimneys? Do you look at the water heater? Do you look at the furnace? And, you know, typically the answer to all those would be yes. Now, if it's a two-story house that has say a 15-foot chimney that's, you know, projecting through the roof, I might have a little bit of a hard time, you know, thoroughly inspecting that. There are chimney guys out there who would be able to drop a camera down all the way down from the very top to the very bottom and take pictures of, you know, is there a flue liner in there? Is it cracked? Is it full of soot? Maybe there's a bird's nest in there or something like that, to where I'm not able to, you know, maybe I don't have the equipment, the ladder setups or what have you, to be able to do that. So therefore I would, you know, explain that in my report. Hey, I was able to check the outside of the masonry chimney, but I wasn't able to visually look down the chimney. And remember that a home inspection, regardless of what, you know, part of the house you're looking at, it is a visual inspection. So, you know, there's a program on TV, and I love the program. It's called Homes on Homes, or Homes Inspection. Mike Holmes is the guy there. He will punch holes in walls and try to see what's behind there, or what's wrong with that outlet box or whatever. We, as home inspectors here in Ohio, that's not part of our standards of practice. You visually see, you know, issues. You try to, you know, take steps to see what's causing that. Say, oh, I see a water stain on the ceiling. Is that coming from the roof, or is that coming from the bathroom upstairs? So you can investigate, and you can, you know, really thoroughly look into that. But I'm not going to go up there and punch a hole in the ceiling to see if there's a pipe leaking up in the ceiling. If there's a tub up there, it's very possible that it is the tub leaking. There's some plumbing issues, but it's not a roof leak. So that goes back to the training, different things like that. Now, if you were on the second story of the house, say the upstairs bedroom, and you see a water stain, and you noticed on the outside that you saw some shingles missing, or the flashing around the chimney was, poorly done, then that could be your answer to that leak in the ceiling there. So, it's not a evasive to where you're, like I say, you're punching holes in the ceiling, you're ripping shingles off to find out how many nails were put in the shingles and that's why they blew off. It's nothing like that. You just have to use your training, and common sense is in a little bit of investigation is really what it boils down to. How long have you been practicing in the home inspection profession, and how many inspections have you completed? This is really a kind of a tricky question, and you have to, there again, trust, because, if somebody asked me the first 2 months of my inspection practice, how many inspections have you done? I would have said 5, 6. Well, that's not really much of a background, is it? Not as far as a home inspection, but when they dig deeper, they say, well, what about, do you have any other background in home building? Well, I've been doing home construction since I was 18 years old. So I have basically over 40 years of experience in rather commercial building, residential building, remodeling, decks, roofs, whatever. So that carried some weight. But if you was to find somebody who said, well, I used to work at Walmart and I've been doing inspections for 8 months now, but I've only done 4 inspections. Well, now you got a little bit of a red flag, because his background is not in building. His background, he worked at Walmart for 6 years. And before that, maybe he did retail or something, who knows what. But he doesn't have that, really good established background in the home aspect of it. So be careful, and don't be afraid to ask your inspector these questions. Are you specifically experienced in residential inspections? So you understand the difference between residential and commercial. Commercial is more office buildings, maybe warehouses, high rises, where residential is more your typical house, strictly house, maybe some apartments, something like that. Cap construction is more commercial, where Hoppus Builders that I used to work for was more residential. We built all these houses up here in Northridge area. That's the difference. And if you're buying a house now, if you're wanting to, buy a commercial building, for office space for a business or something, then maybe your residential inspector is not your guy, but somebody who specializes more in commercial building would be. So, that's not a bad question to ask either. Do you offer to do repairs or improvements based on the inspection? So I belong to a group called Internachi, and standard of practice would say that any job or any house that I did an inspection for, I am not allowed to do any repairs or improvements for 12 months on that house that I inspected. Now, if I did an inspection on a house and the guy next door saw me up on the roof and he says, hey, are you checking out that roof? I said, yeah, I'm doing a home inspection. Well, do you do shingles on a roof? Do you do repairs on roofs? And I'm like, yeah, I can do that. I could do his, I just can't do the one that I'm inspecting for 12 months. That's the difference. And, sometimes after 13 months, somebody would call me up and say, hey, remember you did an inspection for us a little over a year ago? Well, we want to finish our basement. Would you be, open to be doing that? I could do it then after 12 months, but I don't do it. I'm not going through there and finding all these issues and then say, hey, I'll do the work for you. That's not good practice. And that's what InterNACHI is trying to avoid. You can get yourself in trouble. How long does the inspection take? Typically about 2 to 3 hours, depending on the size of the house. There was some, maybe it's a 6-bedroom, 5-bath house. It would take me maybe 6 hours. So it just depends on the house. I did a couple apartment complexes up in Urbana. I think they were 8 units, and it took me all day. It was good money, but it took me all day because I had to do each and every one of those apartments, and people living in them, and get up on the big roof because they were all attached. That's a tough one, but like I say, it just depends on how long, but typically it would be anywhere from 2 to 3 hours. So when you call and say, hey, how long will your inspection take? And they say, well, usually I can do them in about 45 minutes to an hour and 15 minutes. That's a red flag, because nobody, I don't care how small your house is, nobody can do an inspection in 45 minutes. There's just no way. And I had people tell me, why are you here so long? I said, well, I'm just trying to be thorough. He said, well, the last inspector that was here about 2 weeks ago, he was done in 45 minutes. I don't understand why you're taking so long. And it's like, wow, it only took, yeah. But he was not thorough. He missed a lot of things. He didn't get up on the roof. He didn't check this. He didn't check that. So red flag if you can't find somebody who's going to spend a good 2 to 3 hours on it. How much will it cost? We kind of talked about that. Typically, right around $350 to $400. There again, it depends on the size of the house. What type of inspection report do you provide, and how long will it take to receive the report? My inspection report was anywhere from like 30 to 50 pages long. Had sometimes up to 100 pictures. There again, it just depends on how bad the house was, how many issues there were. And it was always sent via email, PDF form. So, and then will you be able to attend the inspection? I never was a big fan of that. Some people like having you there during the whole entire inspection. I never did like that because I could easily be distracted. I really didn't even like it when the homeowner was there. Sometimes it was helpful, to tell me different things about the house. Hey, we just had a water heater replaced last month. The furnace is only 1 year old. The attic access is upstairs in the master closet. Things like that. That would be helpful. And then they would leave. That would be great. If they're standing around, walking around, holding my hand and, want to know everything. Well, why are you doing that? Or why are you doing this? Those windows are okay. You don't need to check those. Just things like that. Some people will try to draw your attention away so you miss something, and they don't want, there's been times where I go and find an attic access and open a closet and look up and there's the attic access, but there is no way that I can get in there with a closet full of clothes. Say it's a utility closet and there's a vacuum cleaner in there and there's all kinds of boxes, because an inspector, we're not supposed to move anything just for liability reasons. If I pick up a box and it's full of glassware and I accidentally drop it or trip and fall and the box breaks, I can be liable for all those valuable dishes or whatever was in that box. So I'm not moving anything. I'm not crawling on beds to get to a window that, there's a bed in front of. I just take a picture of it and I say, look, I wasn't able to tell if that window was operable or not. Based on the rest of the windows, none of the other windows worked. They were all caulked shut. They didn't stay up, which is a safety hazard in a bedroom. So I would make sure that before closing and this house is empty, that you make sure that that window works, because or you can pay me to come back and I'll check it, whatever. But those are things that are all in your report, a good report and standards of practice, things that we are responsible to do and things that we are not responsible to do. So just, keep that in mind. Do you maintain membership in a professional home inspector association? We talked about InterNACHI and ASHI. That's your membership, and usually that's like $400 a year. So it's a well, good education and things like that that really keep you sharp and on your toes, and different ideas from different inspectors about the different routines that people use. Somebody would always ask me, well, we're supposed to get, there's 100% chance of rain tomorrow and it's supposed to be really heavy. Will you come out when it rains? Absolutely. That's the best time to do an inspection, is when it's raining, because I can check the grading of the yard. Is it puddling around the foundation? Are your gutters clogged up? We're going to maybe see some slides at the end of problems with gutters. And it's just simple. Well, next week we'll talk about maintenance. This week, of course, is inspections. But clogged gutters are so easy to maintain, but can be so detrimental to your foundation if you don't keep them cleaned up. I have a few trees in my backyard, but I have to clean them out, my gutters out, at least 2 or 3 times in the fall. And it only takes a handful of leaves to clog up the downspouts, to where if I don't keep it unclogged, the water is coming out and over top and straight down the foundation. It could cause me to have a flooded basement if not careful. So that's part of that routine, and that's, like I said, that's another reason why if it's raining, I absolutely want to do inspections when it's raining. Okay, moving on to the next one. So everybody has 5 senses, or at least you're born with 5 senses. And when you are going to your first house and you pull up in the driveway, that's when you're going to begin using them. So you pull in the driveway and you start looking. You're looking at the driveway, you're looking at the trees in the yard, you're looking at the roof, you're looking at the windows. You see a shutter on the side of the window that's pulling away. Well, that's not a big deal. That wouldn't be a write-up per se in a report. It might be noted, but not as it wouldn't be in your summary page to where, hey, you really ought to fix that shutter. It's not that type of a critical issue, like, hey, your water heater is ready to blow up, you better fix your water heater or replace it. The shutter, I would just take a picture of it and say, loose shutter on right side of window at front living room, and just put a new screw in it or whatever once you get moved in. Not a big deal. Anyway, you're looking at all these things. And then when you get into the house, you can, as soon as you open the door, you can start by smelling. Does this house smell like cat litter, or does it smell like there's been dogs roaming the house? Is there a smell of mold or mildew? And then, when you're touching, you're listening, go to the kitchen sink, and you'll be able to use all 5 of your senses right there at the kitchen sink. Number 1, you're going to smell the water. Does it smell like sulfur? Maybe you're going to move out to the county or, country, and you're going to be living on a well water. And it smells very much like sulfur or rotten eggs. Well, that's going to tell you that you're probably going to need a water softener to take care of that, to make sure that water is safe and good to drink. You can also taste the water. Does it taste like sulfur? And, I have a hard time with well water if it's, got a lot of iron and sulfur in it. I just can't handle the taste of it. You're also going to touch the water. You turn the faucet on, and so you're touching the faucet, you're checking the water. How long does it take to get hot? That would be an indication that maybe your water heater's not working. Maybe the pilot light's been blown out, or whatever. And then you're going to look under the sink. Do you see any water damage? Do you see any mold under there? You're going to listen for any leaks. So you can use all 5 of your senses and not even leave the kitchen sink area. So those are things that, you know, when you get into a house for the first time, those are, you know, using your five senses that you're going to look at. So we talked about, you know, smelling. Like I said, when you go down to the basement, maybe you're going to take a peek in the crawl space. Does it have that moldy, mildew, damp smell to it? You know, that can be a sign of a lot of things. Maybe a foundation issue where moisture is getting in the basement walls. Maybe there were cats down there. There's all kinds of things that could be issues. And then taste, like we said, taste in the water, you know, and sight, using your eyes. You're looking at the roof. You're looking at, of course, issues with the water heater, with the furnace. There's a lot of rust there. As far as hearing, you can listen for leaks. Some people will mention they can listen for air blowing through a window that's closed. Well, that would be under energy efficient, and you know, you would want to get that taken care of. Here, we're going to look. You know, you're touching, you're flipping light switches on. This picture here on the right, where they're touching the glass, they're basically just looking to see if that window seal is broken, because if it looks like there's moisture and you go up to touch it, but it's, you know, it's in between the panes, then you have a broken seal. That can be an issue as far as efficiency. So, you know, that would be something that maybe you ask your buyers to put in a new window for you before you purchase the house. Moving on to, does anybody have any questions real quick before we go on to 5 things to be aware of, but not to be afraid of? Anybody have any questions up till now?
No, not so far.
Do you have a question, Jamie?
No, I don't have any.
Okay. All right. Okay. So moving on to 5 things to be aware of, but not to be afraid of. Here's part of what we talked about, you know, with mold. If you have any kids, especially little kids, and maybe parents are going to live with you. My mom lives with us. If there's any asthmatic issues with breathing, maybe they're highly sensitive to certain smells like mold or you know, whatever. Be particular cautious of that when you're looking at a house. If you see signs of mold, that would be something to be aware of, not necessarily be afraid of. And I say that because mold, carbon monoxide, radon, lead-based paint, asbestos, all those can be taken care of and remediated, which remediate means just to get rid of. You can do that with all of them. Just make sure that you're aware that they are there. Now let's take care of the problem. To take care of the problem of mold, you need to get rid of a couple different things. Moisture, which mold will live on, and then what their food source is. So is it drywall? Is it maybe some wood paneling, something like that? Moisture, you know, is going to be the culprit. So is there a leak somewhere? Is there moisture getting in between the walls? If you eliminate those and get that dried out, the mold will go away. It won't go away on its own. Sometimes you do have to cut the drywall out, put some new in, but as long as you take care of their food source, then it won't come back. And then the same way with carbon monoxide, is it cause of a furnace? Is it a poor ventilation on your water heater? Now, if you have an electric water heater, you wouldn't have carbon monoxide, but same way with the electric furnace. But if it's gas, you could end up with, you know, poisonous gas emissions in the house. If you have a electric stove, no worries there. But if you have a gas stove, you know, if somebody has turns the burner on and it doesn't ignite, you know, by the little spark igniter, then you could start to begin having carbon monoxide poisoning in your kitchen. So, you know, that's why some people like all electric houses, just for that very reason. But then keep in mind that there are things like automobiles. If you pull an automobile into your garage, well, you're pulling in carbon monoxide. So, that's another source that you have to be careful with. And another thing would be space heaters. Remember, it's not this past, but last winter in Texas, they had that freeze thing that went across the state, and everybody was all kinds of freaking out and stuff. And what a lot of them were doing is buying these heaters, torpedo heaters, kerosene, whatnot, and they were putting them in the garage and trying to heat their house. Well, the problem was they were not bringing in any fresh air, and they had carbon monoxide poisoning. A lot of people were dying because they put these things in the garage, closed the garage door, turned them on, and getting carbon monoxide poisoning. So wasn't very smartest thing to do. I understand they was trying to stay warm, but ended up killing several people because of that. Radon is a breakdown of uranium in the earth. So it's there again, it's nothing that you can eliminate. You could have a high concentration of radon at your house, and your neighbors 3 houses down may not have a trace of radon. It's just, how it goes within the earth. Was there a lot of uranium in that pocket of ground that you're building on, or your house is on? That's really all you can do. You can't get rid of it. Remediation, there's it costs about $1,200, $800 to $1,200. When you go to have a home inspection, ask your home inspector, do you do radon inspections? If he says yes, and you say, well, I'd like to have one, you're going to look for a magic number of 4. So if it's 1, 2, 3, or 4, you're good. If it gets up into the 17, 18, 19s, or 20s, anything like that, then you have high amounts of radon in that house, and you would want to have it remediated or removed. Lead-based paint. This goes along with young kids, not so much adults, because the kind of the age limit for lead-based paint poisoning is age 6 and under, and that's basically because little kids put things in their mouth, they're ingesting lead-based paint. You can bring it in from outside. You have, your exterior siding is painted with lead-based paint, and it's peeling off, and the kids are playing out in the yard, and it gets on their shoes. They come in, it's in the carpet, and little toddlers, 2, 3 years old, they're crawling around the floor. They put things in their mouth. They're getting up to the window. They're gnawing on the windowsill. They're teething. All these things bring in lead-based poisoning to kids 6 and under, and they're in that development stage of cognitive learning. Neurological system is developing. So it can be very, very, very bad for kids 6 and under. So be careful. There's not many lead-based paint inspectors around Ohio. Sometimes you have to go to Columbus or Cincinnati, maybe Dayton. You might find somebody. I just recently took a lead-based paint test for licensing it was last month, actually. And I did pass. I have not received my license in the mail yet, so I can't do any testing. But once I get that license, I will be able to do lead-based paint testing. Be careful with that. Now, if you have a brick house and it's not painted, not too much of an ordeal as far as the outside goes. But if there again, so lead-based paint was eliminated or banned is the is the word I was looking for, was banned in 1978. So any house that was built, say 1979, in the 80s or 90s, or even in the 2000s, you're going to be fine. There was no lead-based paint. you buy a house that was built in the 1940s, your risk of having lead-based paint somewhere in that house is very, very high, whether it be on the outside of the house, on the porch floor, maybe the handrail going upstairs or the steps. And the thing is too, to remember, and this, I learned this in class, it's not just lead-based paint, but it could also be lead-based stains, lead-based varnishes. So if you have a staircase that's going upstairs and it's stained and varnished but not painted, well, that stain and varnish can have lead-based in it also. So be careful with that. And trust me, in Springfield, there are a ton of houses that were built in the 30s, 40s, even before that, and peeling paint, and I guarantee you there's lead-based paint in them. So be very aware of that. A lot of times people will take, an outside of a house, and instead of, scraping and scraping and repainting and all that, they just basically put vinyl siding over it, and that really eliminates. It's not necessarily remediating; we call that encapsulating, but it keeps the paint from peeling off, hitting the ground, and being tracked in and picked up and eaten by the kids. So that's one good way of doing it. But like I said, keep an eye on lead-based paint. Our last one is asbestos. That ranks up there with lead-based paint. And the thing about all 5 of these, if you notice, it's when we talked about ingestion with lead-based paint, but there's also inhalation. So all 5 of these, when they become airborne, is when they really, really become a problem. So mold, if it's intact, it's not really going to hurt anything, but when it gets in the air, that's when it's a problem. There's actually 22,000 different types of mold inside your house, outside your house. Mold is here forever. You can't eliminate it. It's out in the trees, it's in the air outside. It comes into the house. It starts to grow, it multiplies. I've seen on some inspections, I've seen some really, really, really gross mold spores, whether it looks like, cat hair, and, you think it's a big ball of cat hair. Well, it ends up being mold. You think it's a potato chip looking, actually they call them wet noodles. I've seen that on carpet growing before, on wet carpet down in the basement. Some of it's just hideous. But going back to asbestos, and let me go through some pictures here, some photos that I took. This is just your typical black mold type in a basement and around some windows. Very common with moisture issues. That's what you're going to see. Here's one up in the attic. Again, poor ventilation. No circulation of air movement there, and you get that white powdery looking substance on the rafters, and up on that roof sheeting is mold. Here's some other mold problems up in an attic. Attics can be, and we'll go over this here in a little bit, but attics can be very vulnerable to mold if they're not insulated properly, if they're not vented properly. Just all kinds of issues can be up in the attic. This is the one that I mentioned, the wet noodles here. You see it by the box. Now, your food source is number 1, the wet carpet. So there was a ton of moisture in this basement. And then the other food source is this cardboard. Mold loves to grow. This is a cellulose type tree, product of paper, wood, or cardboard. So the fungus here, or wet noodles or mold, however you want to call it, is really feeding off this moisture in this food source here. These were really, really nice bar stools at one time, and they are just absolutely covered in mold. This is the same basement as these 2 pictures are from the same basement. It was just there was so much mold on the handrail, on the ceilings. We didn't do any work here. We looked at it about 3 years ago, but we did not do any work there, so I'm not sure what come of that job. Access to a crawl space, and then once you get in the crawl space, here again, you're seeing moisture on this ductwork. So in the say in the summertime, or either in the summertime or wintertime, when you have contradicting warm air versus cold air, you're going to get this condensation buildup on the ductwork. So let's say there's cold air blowing through there, and the relative humidity outside is say 92%. It's very damp outside. Well, that's going to produce this moisture, and then it drips down, and then you're going to have some mold here. This is the picture that I wanted to show you. All this white powdery looking stuff is mold. That all had to be remediated for the buyers, because they were not about to buy that house with all that mold down in the basement. Carbon monoxide, we talked about that, emissions from automobiles, from gas stoves. This could be, your flame down at the bottom of a water heater. And then if it's vented poorly up on top, you could get carbon monoxide poisoning in your basement. The nickname for carbon monoxide is called the silent killer, because you really can't taste it, smell it. You'd be lucky if you could, maybe hear it somewhere leaking, but it will just very quietly, very calmly put you to sleep, and then possibly kill you by inhaling the fumes. So we highly recommend carbon monoxide detectors. I was just putting in some smoke detector, carbon monoxide detector combinations at some apartments that we own, and they work very well. When we get to smoke detectors, if I forget to mention, it is very common and wise to, number one, change your batteries every 6 months. So we say, as a kind of a rule of thumb, when the clocks change, spring forward, fall back, that's a good time to change your batteries in smoke detectors, in carbon monoxide detectors. Also, fire or smoke detectors need to be changed or replaced every 10 years. Now, when I was changing the ones today, I did notice the dates on them were 2010. So that's why they needed to be changed. And a lot of times smoke detectors, the aggravating chirping that everybody complains about. Number one, it could be bad batteries. They could be very dirty. Maybe there's several smokers in the house, and that will cause them to become ineffective and set off that chirping sound. Another reason why to change them, like I said, every 10 years. So, but whatever you do, don't pull the battery out because they're chirping and you're tired of that annoyance. I know they can be very annoying, but you have just eliminated your safety way out in case of a fire, because if they're not working, you'll never know. And you and your whole family could die in a fire simply because the batteries were pulled out of the smoke detector. So not a good practice to do that. I'm going to move through. Here's the slide for radon, and this would be this here on the right, or I'm sorry, on the left, would be your remediation. They did this one through a sump pit, and the gases just go up, come into this filtering system and blower, and then on out above the roof line. And you can see that the breakdown of uranium through the soil, and it can come up through hairline cracks, any kind of penetrations through the basement floor can seep into the living area with the radon. Here is the lead-based paint photo that we use. You see the peeling paint on the window there, and the kid, it always cracks me up. That's probably why I put this photo in here. we mentioned about ingestion and inhalation. Well, he's got his toy truck on there, and this, I mean, this is just a common kid just playing with his toys, but you see how he's got his tongue hanging out, like he's been eating the paint or something. I just thought that was kind of humorous there to see his tongue hanging out with talking about lead paint. Lead-based paint was banned in 1978. Different behavioral disability problems, malformed bones, slow growth, can cause seizures, coma, death. It is something to take very, very seriously. So don't mess with lead paint. Now, if you're going to buy a house and you think there might be lead-based paint, and maybe you don't have any kids, maybe you're not planning on having any kids, that's a little bit different scenario. But if you have, a toddler, maybe you're pregnant and you have one on the way, think very seriously of buying a house that, like we said, built pre-78 or, older. And the older they are, the more prone they are to lead-based paint. Have it checked, have it tested. If it's red, it's lead. These are not, these little testers here, you can buy these at Lowe's or Home Depot for about, I think they're about $15 to $20, but they are not like FDA approved. I don't know if FDA is the right term, but these are not approved, maybe ODH. You would want a more substantial type of testing versus this. Now, I would say if you did buy one of these and, you did a sample, this really wasn't a very good way to sample either. But if it does come back red, then maybe, that's kind of a red flag, no pun intended, to then have it further tested by a professional licensed lead inspector if you have suspicions of that and you have kids in the house. This would be asbestos pipe wrap, very common in older houses where they had, the old radiators with steam heat. This would keep the heat in the water from escaping, so they use this asbestos pipe wrap. This would be wrote up in an inspection report, but it would also be recommended to be removed by a professional asbestos abatement company. This is not something that you want to mess with. Mask, no mask. It's something that professionals really need to handle. This is vermiculite insulation. It's, there again, if you're trained, you know what to look for. If you're not trained, you're like, wonder what this stuff is. And you grab a shop vac, or, maybe your kids are up there playing around in the attic by chance. It is very, some very rough stuff. I inhaled some of this stuff, not on purpose, obviously. We were insulating some masonry walls on a church building. And I had just eaten McDonald's, and we were putting this stuff in the wall, and it was a windy day. And I know I was inhaling it, and I got sicker than a dog. It was terrible, terrible stuff. Nothing that you want to mess around with. If you do see this up in your attic and you happen to see, I've seen this stuff about a dozen times in attics that I've inspected, and it almost seems like every single time that I see the insulation, I see an empty bag that says this very same thing: zonolite, vermiculite. It's just amazing. It's like a dead giveaway, what it is. And a lot of times, like this photo here, you will see pink fiberglass insulation covering this. There again, it's okay left alone, and it's not airborne, but it's nothing that you want your kids playing with. If you want to get it out of there, call Robinson Insulation or somebody like that who can professionally, get it sucked out of there and make your house safer. Don't do it on your own. It's not worth it. here is, so those are all types of asbestos material. Here is some asbestos tape. Now you're using duct tape in replace of this. There again, this looks pretty intact. So I would take a picture of this, but not necessarily write it up, but I would just make mention that, hey, you do have asbestos tape in your basement. Keep an eye on it. You don't have to pull it off. You can go over it with duct tape or the furnace foil tape, so it doesn't become frayed or start to peel off. But right there, that picture, that's just some old tape, but it looks pretty decent shape. Let me scroll down here. We're only halfway through our photos. I know we're getting ready to wrap up here. I'm gonna go to see if I can find. We got some electrical pictures in here. Here are some. I told you I did some the termite inspections. These are actual termites. This is what they look like. Now you're seeing here this photo on the left. This is the swarmers. And they have the wings. Those wings will eventually fall off. But if you see these in a windowsill or anything like that, you definitely want to get an exterminator, pest control people out there, because you will have severe wood damage. And there's nothing that worries realtors anymore. The first thing they would ask me on a inspection, when they come and meet at the end is, hey, did you see any termites? They're not worried about the water heater. They're not worried about any electrical issues. They want to know, did they have any termites? Because there's something about termite damage that is just, it's very costly. It can be very damaging, but realtors do not like hearing that your house has termites. This middle picture here looks like black ants. Those are carpenter ants. And then these would be your actual termites. These are the workers or the soldiers. This possibly could be the queen. It's hard to tell. The queens are definitely the bigger ones. Just like a beehive, they have queens. Termites also have a queen. They have colonies. You can have a half a dozen colonies within a yard, close to the house that are ready to pounce on all your wood. I'm going to show you this picture. This was an inspection I did up there off of Limestone a couple years ago. And this was the foundation. You see a little bit of mold and mildew going on there. You see this long horizontal crack here. Well, that horizontal crack was so big, I was able to stick my finger in there. And that was a red flag for the owner or for the potential buyer, and he walked away from it, and I don't blame him. So it was really just, it was better for him to walk away than to pay $20,000 to have the foundation fixed. So I am going to stop right there. We have 4 minutes left at 7:56. If everybody would maybe unmute, and if anybody has any questions about any of these photos that we went over, anything there. I am real quickly going to show you this picture here, and you'll see this again next week when we talk about home maintenance. This is a house up in Northridge. Nice house, ranch, really nothing wrong with it. Next week when we talk about maintenance, the reason that this house foundation caved in was simply because they did not clean out their gutters, and all the water for about 3 months, every time it rained, was spilling over into the yard against their foundation and caused that hydrostatic pressure and pushed the foundation right in. And it was they almost bulldozed this house over because of it, simply because nobody would clean out the gutters. So next week when we talk about that, home maintenance, gutters is one of them. So with that, anybody have any questions?
No, I don't have any questions. I'm definitely familiar with cleaning out gutters. That's something my dad had us doing regularly. I
Oh,
see
yeah.
why.
Yeah, yeah, and the thing about gutters too is, maybe you don't have any trees at all around your house, but you have, neighbors on this side and neighbors on this side. They both have kids. They like to play ball. They like to hit badminton birdies, and a tennis ball is the perfect size for your downspout, and it will clog that thing up. And when a tennis ball gets wet, it kind of swells up a little bit. It will clog that downspout up in no time. And a very big culprit. Badminton birdies, you're playing badminton, or like I said, tennis balls. They hit the roof, they roll down, they land in the gutter. Then it rains, then they wash down to the downspout, they clog it up, and then all the water's overflowing into your foundation. So, just because you don't have trees, it doesn't hurt. Every once in a while to check your gutters out. So,
Absolutely.
okay, I am going to ask for Rachel.
Yeah.
That's the one I wanted. So Jamie's good, Margaret's good, Pepper's good. No questions with anybody.
No, it's been very helpful. Thank
All
you.
good.
Okay. All right. So next week we're going to talk about home maintenance. Going to go through several slides again. It's going to be, tonight was more prior to you buying your house. Next week will be after you've bought your house. So I hope everybody joins us.
Hey, I do have one question.
Sure.
I know you do inspections for homes. Would I call you, or is there a separate person you call for land inspection?
For what inspection?
For like land. Do they have inspectors if you ever want to purchase land?
What particularly are you looking for? I mean,
just later down the road, I would like to buy a few acres.
Okay.
Just for obviously gardening and things like that. But I was curious if that was a thing, if you ever needed like a land inspector, or if that was, I don't know. Just a thought about it.
Yeah. Okay. So I understand your question. I'm not sure if anybody specifically does land. It would take somebody. Now you might want to call like an excavator. Maybe maybe a surveyor would be a good one. Somebody who could maybe possibly do a test, like an excavator. He could dig a hole, and that's called a perk test. Tell you how the soil is, if it's well draining. Is it buildable? Can you build a house on this dirt? Maybe it's very sandy. So yeah, maybe like I say, look into a surveyor or an excavator, and they would definitely be able to help you.
Thank you.
Yep. Okay, so with that, I'm going to turn it over to Rachel, and she will instruct you on the rest of the evening. Take it away, Rachel.
Thank you, James. Great job. So yeah, James is right. Next week, we are going to cover home maintenance, how to take care of the home you bought. And right before him, we're going to have a realtor talk with us about working with the realtor and actually doing the shopping of the home. So with that, we are going to wrap it up. I will email out the slides, the presentations in the morning. And if anybody has any questions, feel free to shoot me an email or call anytime. All right. Thank you all for joining us. Have a good evening.
See you next week.
You too. Thank you.
All right.
Thank you.
Yeah.
Bye.
Have a good night. Bye.
Bye-bye.